Everybody, Brock Vandenberg, fund manager for TaliMar Income Fund. Today, I'm actually up in Sun Valley, Idaho, doing a little retreat with my family, getting some skiing in, enjoying some of the snow that just came in. So dressed down and looking like I'm just wrapping up a skiing trip. So a couple things about Sun Valley, Idaho. If you've not been here, I'll tell you, the longest line that I waited in all week was 5 minutes. So if you're looking for great skiing to get on the mountain quickly, recommend Sun Valley, Idaho. I know that probably the residents didn't want me to say that, but I mean, seeing those photos of Tahoe and Park City, some of the other places that I go to, and seeing those hour lines. So Sun Valley beats those lines. But I quickly wanted to give my thoughts and updates on the fund and what we're seeing in the market for this week. So first off, for those that don't know me, I'm Brock Vandenberg, fund manager for TaliMar Income Fund. We are a private debt fund. We specialize in financing residential, commercial, multifamily properties in the Western United States and primarily in California. Loan sizes, typically, we are funding between 1 to 10 million. So a couple of just quick announcements. Number one, earlier this week, I hosted a fund manager update on behalf of the California Mortgage Association. If you missed that webinar, so the webinar was really targeted at fund managers or people interested in launching a fund here in the state of California. If you missed the webinar, the CMA will be posting that webinar here in the next week or two. It was great insights from some great panelists. Those panelists included Kevin Kim of Fortra. We had Matt Burke of Veravest, Enrique Flores of Servicing Pros, and Vance Hillstrom of Rubicon Mortgage Fund, representing an actual fund manager and giving his insights. So if you missed that webinar, we will be posting it here in the next couple of weeks. Go check it out. We shared a lot of great content about launching a fund, the pitfalls of a fund, how to manage a fund appropriately, and what to expect in 2026. Again, for those that are not familiar with the California Mortgage Association, it is an association for people that are lending in the state of California. It provides an educational platform as well as a platform to represent private lenders in state legislation as an advocacy group. So check it out if you are not a member. Number two, excited to announce that we will be funding our first owner-occupied single-family home. Typically in the past, or we've always in the past, funded investment properties, but due to a number of random set of circumstances, we'll be funding our first owner-occupied single-family home. And the reason behind it, current owner owns one property, wants to buy another property, but can't buy this property without first selling this property. And unfortunately, due to the circumstances, they can't wait to sell this property. So we're doing a short-term bridge loan, providing them the money they need to fund to purchase this property or the new property, and they'll be paying off our loan with the sale of their current property. That's our first owner-occupied loan. And if this closes well, there may be an opportunity for us to launch an owner-occupied bridge loan platform. So keep your eye on that. We'll go ahead and release some more information on that new product type. Number three, we close out our financials for the mortgage fund. For those not familiar with TaliMar Income Fund, we are, again, a debt fund. We have approximately 375 investors in our fund. And every month we close out the financials for the prior month and make our distributions. So for the first month of the year in January, the fund earned an annualized yield of 8.6%. We increased total investor capital by approximately $3 million, and total investor capital peaked at $129 million. So the fund continues to grow. Those currently invested in the fund, thank you for being a part of it. Those that are interested in learning more about the fund, I'll go ahead and put a link below to get a copy of our executive summary. Number three, something that I have some thoughts on, and that is these private credit funds and the fact that they're focused on raising money from what we'll call retail investors. Now, as a fund manager that does raise money from retail investors, I can tell you it's a tough platform to manage, especially with retail investors versus we'll call it institutional investors. And the reason being is what I find with retail investors is that number one, you need to communicate on a regular basis. But number two, retail investors have a tendency when they see headlines or they talk to friends and family and get nervous about a certain investment, that they typically want to move forward and withdraw their funds very quickly. And what I don't think retail investors understand when they invest in these kind of funds, we'll call them debt funds or private equity funds or these private credit funds, is that these investments are not liquid. When things start to sour in these type of investments and you have a large number of withdrawals, it can be very difficult to get your money out of these investments. And I think that's what you're kind of seeing, especially what is being portrayed in the headlines with retail investors investing in these kind of private credit funds. So that's something that I want to keep my eye on. We'll see how the strength of these funds are as they move into the future. And then finally, last update that I wanted to actually, that goes with all the updates that we're doing. For this week, I've been out of the office, so I've been letting my team close the loans this week. But I know that we've closed at least 2 of the loans that were on the pipeline, including a $1.95 million fix and flip loan in a luxury market here in Southern California with a very experienced developer, and then another fix and flip loan for approximately $590,000, again here in Southern California. Now, we don't just fund fix and flip loans. That is kind of historically that's been our focus, but we've really been growing into larger type bridge loans specialized on retail, infill, industrial. In fact, we're actually looking to close here shortly a first position loan on an office building, which doesn't come all that often. In terms of upcoming events that I think you guys all should be considering, number one, the California Mortgage Association will be hosting Lobby Day in Sacramento. That's March 4th. Yeah, if you're not familiar with Lobby Day, that's when members of the CMA fly up to Sacramento, join with other fellow CMA members, and meet with state legislators to talk about laws and regulations that are in place impacting the private lending industry. I did it last year. I found it very interesting to sit down with legislators and hear their perspective on our industry. And it's really important that we do this type of stuff to continue to promote the private lending industry and how important it is in real estate finance here in the state of California. Second, the California Mortgage Association is going to be hosting their annual conference March 18th. Definitely attend this event. It's Newport Beach at the Balboa Bay Resort. Great opportunity to network with other private lenders that are funding loans in the state of California. We also talk about educate you on new regulation rules to take into consideration if you're lending in California. Third, you got the Fortra Vegas Nationwide Private Lending Conference, March 30th and 31st. Great conference if you're lending nationwide, even in California, but they do a great job of providing a lot of good insight into markets nationwide and talk about kind of the new trends that are happening in the private lending industry. So those are three upcoming events that I would highly recommend that you get involved with. And then let's finish out with some tips on submitting loans. As I had always mentioned, we are funding loans between 1 to 10 million, both single family, multifamily, and commercial properties throughout the greater Western United States, primarily focused here in California. Things that we really look for on loan requests, if it's a new purchase loan, we want to understand why the borrower, number one, is going to go the bridge loan route. We do look at where the location of the property is. We really want to be focused in core California markets. Number two, yes, we do look at borrower credit. Typically, our minimum is 675. We want to see the borrower have a decent credit and not a history of late payments or defaults on revolving credit lines. Normally, we're closing loans within about 7 to 10 business days, but it's really dependent upon how quick the broker or the borrower submits their diligence material. Best way I recommend when submitting a loan request is go ahead and submit it through our loan request form. It asks all the pertinent questions that we need to respond to you with an accurate letter of interest or quote. I'll go ahead and include a link below on how you can submit that loan request. And in terms of refinances, we're definitely open to doing refinances. We just have to understand why the borrower wants to refinance the loan, and we will look at the payment history. We don't want to see a history of late payments on on loan refinances. And no, we do not do foreclosure bailout loans. I know it's never the borrower's fault. I totally understand it, but it's really hard for us to get comfortable if the borrower has a history or has a foreclosure on the record. So want to say thank you for taking a moment to watch this video. I'll be cleaned up for next week, but it is the tail end of my vacation and I want to enjoy it. So, and those again, if you want to consider a great place to go skiing, think Sun Valley, Idaho. Thanks very much.